Hello, I'm Dominic Hobson, co-founder of Future of Finance. My guest today is Greg Medcraft, Director of the OECD Directorate for Financial and Enterprise Affairs. The OECD has this long-established role in establishing international standards and best practices, and you've had quite a lot of success in areas such as governance, offshore financial centers, tax compliance. We're now in a world where blockchain networks, I'd call them, are developing in all sorts of jurisdictions. They're transversing all sorts of industrial and commercial sectors, not just finance. And there is, of course, now a risk of these networks failing to interoperate, thereby suppressing liquidity. And in particular, they also need to hook up to all the established trading networks as well. What has the OECD done? What is it doing? And what could it do to mitigate this risk of fragmentation and help promote interoperability?
There's little doubt that we've got a fragmented and silo networks. And the problem with that is actually it limits the potential efficiency gain that blockchain could actually bring to whole sectors and the economy at large. And the OECD, as you said, is a standard setter. We're a policy standard setter. And we've actually been developing best practice guidance for actors in the blockchain system, including governments, but also with industry, academia, and civil society. And there's probably two elements of this guidance in particular that are relevant. First of all, under the guidance that we're developing, that's actually directed at all blockchain actors, including industry, is the needs to promote, to your point, interoperability of blockchains, including through open standards and with non-blockchains and existing IT systems. Okay. And secondly, in the guidance we're looking at, which should come out hopefully at the end of this month, we have guidance directed to governments, which includes looking at importantly the need to cooperate internationally in this area, in particular to pursue global coherence across frameworks, regulatory frameworks for blockchain innovations and adoptions, which actually goes sort of to your point about avoiding national silos, right? So there's an industry aspect and a government aspect. And again, this guidance or policy advice, we have been working with member countries. We have an expert panel of over 100 members, and to again look at the best way to bring this guidance to the world, to the policy world and beyond. In terms of standards, it's policy. The technical standards, we leave that to work to bodies like the International Standards Organization or the ISO, which itself has a solid program of work in this area. However, OECD standards are powerful in terms of their communication to industry, but also to technical standard setters, really from governments to network setters. So how they expect things to develop, and also again they're a reference point. It's what governments do is see what potentially OEC's recommendation is when they're looking at policy setting, but also governments need to look at it as well. So interoperability, critical. Industry needs to look at it in terms of developing. Governments actually need to look at the issue about making sure that they don't have policies that are, that encourage global harmonization.
On the purely technical standards, you've explained that you leave that work to bodies like ISO and IEC, but can the OECD play a role once those standards are agreed in diffusing them?
Country reviews, we do regional reviews, we do thematic reviews. It's part of what we do in our research. So, one thing is actually the key part of what we do is, first of all, if you have a standard or a best practice, then you really look to review and see, if a country is interested to see how they're lining up with a potentially best practice. And that's, that's something that we do against a lot of our other best practice or standard setting work.
You mentioned research, and obviously one of the other main axes of work at OECD is the gathering of statistics, data, analysing the data, publishing reports. Now, it strikes us that one of the things that's inhibiting issuers and investors from engaging in the digital asset tokenisation markets in particular, I mean here security tokens, is a high degree of legal and regulatory uncertainty. Now, clearly tracking legal and regulatory developments across tokenisation markets in all your member states, you've got, I think, 36 members, so that would be a massive undertaking. But are you doing any work at all which would help to encourage a degree of legal and regulatory consistency? Because I think that would do quite a lot to accelerate the growth of security token markets, particularly across national borders.
First of all, in terms of our coverage, we have 36 member countries, which cover 80% of probably the world's trade and development trade. But equally, we have countries, often we're dealing with 150 countries, including China. So the reach goes well beyond often the full member countries, because other countries participate in our committees. That's the first point. The second thing is on tracking and assessing developments in digital finance. As I say, it's a big part of our role in terms of keeping governments and regulators responsive to market developments. And again, we do 5 things. We do research, we do standard setting, we do the implementation of standard setting, we do the issue of forums and bringing people together, and we have partnerships. They're the 5 things we do at the OECD and how we do our job. So in terms of research, we've done a series of assessments on blockchain-based financial innovation, from ICOs, where we have research, to tokenisation, where we released something earlier this year publicly. And at the moment, we're actually doing a paper on decentralised finance markets, which is the new cutting edge area of finance. And that work, again, is designed to prioritise the issues for regulators and put forward a common set of tools to help them meet their mandates. So, and our core message often is twofold. First is that blockchain financial products do not change market fundamentals, and regulators should focus their policy interventions on achieving their mandates, being basically financial stability, market efficiency, fair and orderly transparent markets, and basically fairness and protection of consumers, trust of investors, consumers. And this doesn't actually change with the method of service delivery or the business model. And actually what we find is that fintech is usually just a new way of offering an existing financial product or service. At the same time, there is a need for clarity and guidance about how regulation applies to, say, blockchain technologies. So market participants need to know what activities fall within a regulatory perimeter and what rules apply. And this does mean proactive engagement between market regulators and innovators. And often the view these days is should be looking at regulating functions rather than entities. And this is something where we need to move more and more to. In terms of financial stability concerns, the OECD is a member of the Financial Stability Board, and I participate in the risk committee of the Financial Stability Board. And so we do contribute to active monitoring and assessment of financial stability risks. And what we've actually found so far is that crypto markets aren't big enough or sufficient exposure to the mainstream financial system to pose a significant risk at the moment. But, we are monitoring. But on the consumer protection side and on the need for financial literacy, it does remain an active concern, and it's very important part of OECD's work on financial markets. So to illustrate this challenge, we had a recent OECD survey of financial consumers across East Asian countries, which actually revealed the extent of which cryptocurrencies had become a mainstream investment. 30% of people in our sample actually held cryptocurrencies, and the most common reason for investing was to get rich quick. And of that, 28% actually said they couldn't afford to lose the money they'd invested. So that's troubling. So again, analysis that we do there, so we do this sort of thing, that then feeds into policy guidance and best practice standards. And here we hold the OECD, the G20 OECD principles of financial consumer protection, which lays out the means to ensure effective and proportionate financial consumer protection regimes. We also complemented this actually recently with specific guidance on effective approaches for financial consumer protection in the digital age. So now looking at this from a digital perspective and how we do it.
Now, the Financial Action Task Force, which you just mentioned and you have a relationship with, they published a report back in March that described digital identity as being at an inflection point, and in effect encouraged financial institutions to start taking digital identity seriously as a solution to one of its most important recommendations for combating money laundering and terrorist finance. That's recommendation 10. You must do customer due diligence, find out who the beneficial owner of any transaction ultimately is. Now, of course, it's not just preventing money laundering and terrorist financing. There's also huge cost savings to be made from ending the duplication of KYC, AML, CFT, sanction screening checks. Digital IDs could also boost trade finance, increase cross-border capital flows, start to include businesses more in countries which have, particularly countries which have rather bad reputations for financial crime compliance. Again, it's an area in which standards, which we talked about for security tokens, standards and best practices could break down those silos, facilitate interoperability. I'm talking here of digital identities, and encourage companies, corporates, countries to start making use of digital identities, both so they become usable, I guess, across borders as well as within borders. Now, is the promotion of digital identities through standards and best practices work to which you think the OECD can and should contribute?
First of all, the Secretariat of the FATF organisationally sits within the Directorate, but they are quite independent, as it's an independent body. But we do we work the various teams do work quite closely with them. The use of blockchain distributed ledger technologies to give control to individual citizens over their personal data is one of, obviously, blockchain's most, I think, exciting applications, frankly. And this potential goes well beyond financial services. Any data collected on a person could be feasibly linked to a person's personal identity wallet, with access to that data controlled by the individual with privacy-enhancing protections like zero-knowledge proofs, which is what is known as self-sovereign identity. And as we know, data is the new oil of the digital era. And so as many governments discovering that perhaps the oil needs to be better managed. So it could have big implications of where economic value lies in the future. I think there's no doubt about that. So digital ID's development also comes at a time of rising concerns. So just hinted at, major governments around the world are looking at the market power of large digital platforms, big tech, and that power is derived in part, large part, from the huge quantities of data they collect and use. And so, from citizens also, they're often concerned about the opaque ways that their data is actually being collected, stored, shared, and used. So I think the environment's changing. I think we are in an early stage of digital ID's development, but I see two main things the OECD can do. Is, first of all, leverage our policy standards to inform and shape the development of the technology in a positive and, most importantly, an inclusive way. For example, our upcoming blockchain guidance explicitly calls for supporting the flow of data and improving protection and individual control of personal data, identifying information and other personal data. So that's in this proposed guidance that we're going to give. The OECD privacy framework that already exists, it was developed in 1980, and it's since been updated to consider the issue of digital technology. It's actually the sort of global touchstone on best practice for privacy and personal data, and has been for decades. The second is actually leveraging our role as a convener. I said that's one of the key things we do is convening, and also researching as an analytical institution to educate. So here we've included a policy discussion on blockchain and digital ID in every edition of the Global Blockchain Policy Forum. So, forum, analysis, and standard setting. That's what we're doing around this really important issue, I think, for the future, especially at the moment.
You've explained very articulately how digital identity shouldn't be considered in isolation. It's actually part of a much wider phenomenon about the control and ownership and use of personal data, and personal data being part of somebody's identity, part of their online personality, if you like. One of the things which surprises us at Future of Finance, we deal with financial institutions all the time, we're very surprised at the limited enthusiasm which major financial institutions actually have for digital identity, which is even more surprising if you consider it in the context of open data, which it clearly has the power to transform their business. And they seem to still prefer to pool the data they have on customers, share their data in a rather old-fashioned data pooling utility way. Does that surprise you? And even if it doesn't, is there something you can do at the OECD to help banks get up to speed with this digital identity, open data phenomenon?
As an ex-banker, I expect that there's a competition issue there in terms of, the data a lot of banks have probably been sitting on a gold mine of data for years, and now they're starting to discover the gold mine they're sitting on. In fact, big tech has discovered they're sitting on a gold mine, and I expect that banks are starting to realize that. So, I think between big tech and the banks, I'm not sure that anyone really wants to encourage the idea of a digital ID, potentially a self-sovereign one, because there will be less data probably available to actually for them to actually offer and share. So, I can sort of understand why they're doing it. Mm-hmm. To what we can do, well, really, it's about, as I said, what we can do is to look to continue with our, member governments and non-members is, again, continue to inform them through research, through best practices, through education, and working on making sure that that we continue to monitor and see what's going on. So I think, yes, education of policymakers is really important to say, well, this could be a really important tool for, say, dealing with making sure that consumers get the best deal possible, and that you have adequate competition in your market.
Greg Medcraft, thank you very much for joining us.
It's a pleasure. Thank you very much, Dominic.